Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
And today we're going to look at CCL. It has just tanked to $11. And, you know, it's been trading in a much higher range previously before this with a much gloomier outlook. So we're going to see if this is a quick way to make cash.
All right, I like it. If you guys enjoy this kind of entertaining stock market content of two stupid guys trading stocks and talking all things personal finance, by means give us a like and subscribe below. We'd love to have you along this little venture of ours.
Forgot the button. There we go.
Two stupid guys trade stocks.
That's the quality we want, right?
Yep, nailed it.
So I was looking at CCL. I've been following it for a while. I think it's one of those stocks. There are a lot of very risky stocks on the market. There are not many less risky stocks long term. I don't think cruises are going to go anywhere. Granted, long term could be 5 years, 10 years, you know, where you can double your money in 6 months, right? So on this chart, we kind of have an accumulation phase. What is this? 24 down to 16, down to 14, back up to 23. That's ridiculous. I mean, those are essentially 50% swings over the course of half of a month or a month, right? And it's going back and forth. So it finally broke this trend line here. It broke the support of 14.93, and we are heading down to really, really low, $11. Now, what we're gonna do is, let me get over here. Vinny is gonna see if this is worth a buy. If I can figure out how to do this.
Yeah, does $11 really represent the value of the company? I don't know, maybe. Hang out for a minute.
Exactly. All right, so this is a very zoomed out chart. I'll let you guess where COVID was.
I'm going to go with that giant cliff, Alex, for 100.
Correct. The low of this, now granted, remember, they did a share offering at like $9 when they were desperate. It was not ideal. Their low, yeah, it was not what?
They've done a lot of share offers.
They've done a lot of share offerings, but that was the most surprising in my opinion, because it's like, oh Lord. But $7.90 is a low. We've been kind of cruising down lower. We finally broke that thing there. $11 we have not seen in honestly quite some time. We don't have a lot of volume here. So it could drop quickly, very fast. We're going to see if this is a good buy. Go over Vinny.
Yeah. In fairness, actually, this is CCL is responsible for my single largest daily gain ever. I made a little bit over $8,000 in a single day by holding 1,300 shares of it on the day that the phase 3 clinical trial data was announced by Pfizer. So it was a fantastic day.
I remember that.
Yeah, that was pretty good.
Actually, I think I had a ton too. Because when we were texting each other, we're like,
we both had a good position at that point in time. You know, this is from Yahoo Finance. You know, basically just utter obliteration of COVID, but now it started to trail off. It was kind of consolidating sideways for a little bit. It started to trail off. The whole market's been selling off. So what I decided to do is revisit a previous analysis we had done and use something called enterprise value. Enterprise value, I can link that other video here if you guys are curious about it. But basically, it's a way of assessing the whole value of the company and everything. You know, when you buy a home, right, there's the piece you own that's equity, and there's the mortgage, right? Then there's the whole value of the entire home. This is a way to do the same kind of analysis with a company, right? So this is from the end of 2019. I didn't want to cherry pick the absolute peak, but I took the end of the fiscal quarter for 2019, you know, the most recent quarter before the COVID pandemic started to set in place.
Which they had been going down a little bit. Like, not a lot, but a little bit before.
They did, yeah. So they were total enterprise value at that point is about $40.5 billion, right? That's summing up all the debt, minusing the cash that they have, and then dividing that out amongst the shareholders based upon the per share price. So $40.5 billion. So this is when we revisited the analysis in March 21st, 2021. As you noticed from the previous slide, that the long-term debt had gone up significantly. Share price had come down some. Cash had gone up quite a bit too, because that's where the debt went, right?
Yeah.
And the shares had gone up, as Dylan talked about. They did share offerings. They actually done multiple rounds of share offerings. And at the time it was about 38.1 billion. So although the share price had gone from 45.08 to 28.96, the actual enterprise value of the company had barely moved from 40.5 billion to 38 billion. Not a significant move, right? A little $2 billion or so, right? So now I revisited the numbers as of the filming of this, which is June 12th, 2022, and I used the most recent quarterly earnings report, which was actually in March. I get the exact date, but it was March 22nd or something like that. They have another earnings release coming up soon here. But I used the numbers I had from there. So they now have 29.9 billion in long-term debt, still creeping up significantly.
Yeah.
Short-term borrowings has gone up 2.7 billion. Cash has come down. They've been having to use the cash to pay for their expenses. And look at the number of shares outstanding as of the most recent quarter: 989 million shares outstanding. Mind you, this is a company that had 692 before the pandemic, and then 775 partway through the pandemic, and now they're all up to 989 million shares.
Yeah.
With this 11.05 share price, the enterprise value is 37.1 billion. So I put together a slide here, kind of comparing the three different time periods. So although the share price went from 45.08 to 28.96 to 11.02, enterprise value has basically been flat: 40.6, 38.2, 37.1. It's come down slightly. So $11 share honestly almost represents a pre-COVID valuation of CCL. So from a business perspective, I'm like, yeah, I don't know.
So that is very important. I'm going to zoom in on this. We were talking before this, and once you break this significant, kind of accumulation distribution phase that was happening, you can usually have an exaggerated movement downwards or upwards, depending on which one you did, right? Because the stock now has to find new value where there's volume being traded, so on and so forth. So there is a decent chance that this could hit quite low. And though the enterprise value hasn't changed, with no new shares added, no increase in debt, because I think this can happen the next 2 months, if this $11 share price goes down to like $8.50 or $9, that's going to be 20% lower. That's going to be a deal. And your goal would probably be a $15 share price for a sell. So
that most recent support level that was broken.
Yeah, because it's usually going to be retested at least a couple times. But I wanted to kind of look at this on a chart and from fundamental aspect, because I know a lot of people are throwing tons of money at this when it was at like $15, right? Because they're like, oh my gosh, this stock was at $60 or $50. It's now the same thing. So
yeah,
I will buy the crap out of it though if it hits 9.
Okay.
A lot.
I mean, we definitely have to see what the earnings report says in about 2 weeks, depending on what happens in the interim. But I think that would give you a little bit better kind of light from like the whole business perspective. There's a lot of positive things about cruising for sure, kind of longer term trends, and even in the medium term, they're talking about the revenue per passenger is going up, and they're seeing some good stuff even within like the restart that they've done so far. But from a long-term business perspective, it doesn't get the Vinny stamp quite yet.
All right. What about at $9?
It's close. I'd have to rerun the numbers at that point.
$9, the enterprise value should be like 27, 28. Wait, no.
So you're talking about
30.
30%? Yeah. So you're talking about another 25% discount from prior.
Mm-hmm.
I'd still be reluctant, honestly. I still would.
Really?
Depending on what the quarter says, yeah. That's not enough of a discount for me to be like, yeah, I'm going to load up the truck at this point.
25% of a share price decrease. So 25% enterprise value is going to put that at, what, 27.
Okay.
No, you're not in? I'm super in.
I don't know. For me to just jump into it, I need to see like a 50% discount.
50. Whew. All right.
Yeah.
All right, guys. Don't go crazy on CCL just yet. It looks like a deal, but not until it hits just a little bit lower. Have a good one.
All right. See ya.